Today, I looked at spot, but there's a premium above spot because spot was created in the transition from a gold-backed system into the debt-based system. And they specifically created that spot is just a contract price. So it's supposed to represent gold in the ground, unmined, but it's just merely a representation in a Wall Street product. It really does not reflect the true value of an ounce of gold, and nor does it at this point. It will, but not at this point. And nor does it reflect its true fundamental value, which I think is absolutely critical for people of any age, but to really understand the fundamental value of any asset or any instrument. Because what we've been trained to think is what Wall Street is showing us, when Wall Street is really like Las Vegas, right? It's about gambling. It's not about creating real value. And so even though, that period of time is absolute, that I lived through is absolutely applicable to the monetary system. So I think a big problem, and let me kind of back up here to move forward,
Sure.
is that people don't really understand what money is anymore. Because money is supposed to reflect the value of your labor. And interest rates are supposed to reflect a couple of things. Number one, the credit worthiness, whether or not you're going to get that money back. And number two, what the value of that money is going to be in the future. So when we were on the gold standard, and this is a 1 ounce gold coin, 1889, right? Pre-1933. But the thing about gold is that it has the most functionality of any asset class. So you're looking at stocks or bonds or cryptos. Those are used in this one area. And dollars, right? Which is what we work for.
Yep.
And what we try to save for future use. But by design, it loses value over time. Inflation. When I was your age, inflation was a dirty word. Today, we're being told that it's going to save everything, that it's a good thing. But what it really does is it erodes the purchasing power value of the money that you work for. So it creates what's called nominal confusion. The fundamental, the true value of 1 ounce of gold based upon its most important function. Does a lot of things, right? It's used in manufacturing, it's used in art, it's used in the monetary system. It's used across the entire global economy. So there's always demand. 100% of the time there's demand. Sometimes more, sometimes less, but there's always demand from the broadest base of buyer. This is really critical. These are the things that people have not taught you. But back in 1971, an average wage was $9,500. And a family of four could actually live on that $9,500. And I'm not saying that they were super wealthy, but you only needed one wage earner. Now, today, the average wage is $48,000. So on the nominal side of it, sounds great. Would you rather have 48,000 than 9,500? Of course you would. But you need two wage earners, and even at 100,000, most people are paycheck to paycheck, and they gave stimulus checks out to people with wages up to $150,000 for two people. What's that tell you?
Mm-hmm. Losing your dollar value. Yeah.
Exactly. Now, I don't have these numbers in front of me, so I could be off on this. But if you took the average wage and you were paid in ounces of gold, it worked out to something like 238 ounces of gold. So if you never got a raise, but you were still paid in the same number of ounces of gold. That works out to, or the last time I did it, you can do the math on it now, something like 345,000. The debt levels are not sustainable. They're not payable. So we're going to have to default on them. However, if I had to choose which kind of debt I was going to have, I'm going to take the fixed rate debt because the variable rate can change like that, but the fixed rate is a contract rate. And if you have something to offset and pay that debt off, that is exactly the strategy that the government uses. So for the government, inflation is good because now you get a lot more dollars in, but your debt is fixed over here. And so in theory, you pay that debt off with dollars in this country that have less value. But you have to have something to be able to pay it off.
Right.
Because what we're going through right now is a complete reset socially, economically, and financially. And that's really where both gold and silver come in. Because this is real money. And because it's used across the entire global economy, there's always demand for it. So this has confidence. Now, we've been trained not to think of this as money anymore because that does not benefit the central banks or the governments. So we've been trained out of it. But if I showed you historically how this always goes to its true fundamental value because this is what they reset, they take in this country, in the US, or Canada too, because you have dollars there too.
Yeah.
But you take the dollar that has no intrinsic value. It's used in one place, it's used in the financial system as essentially a tool of barter. When they reset it against real money. That's why global central banks are accumulating so much gold, right? So they reset it, and what happens in terms of that government money, this now goes to its fundamental value, which is somewhere north of $12,000 right now, even though you can buy it at like 17, 18, $100. I would say become your own central bank. That's what I would tell you to do. 100% become your own central bank. Buy silver, buy gold, make sure it's physical, make sure it's in your possession, because if you don't hold it, you don't really own it, regardless of what your perception is. But I would say this to anybody of any age or anywhere in the world. If you want to thrive through this reset, then you need to have as much wealth as possible in real money that is currently severely undervalued.